Warren Buffett's Berkshire Hathaway just made a new $4 billion investment in Taiwan Semiconductor company, also known as TSMC. Relative to Berkshire Hathaway's portfolio, it's actually pretty small. It's only 1% of the portfolio, but it's a very interesting investment. And given the size of the investment, it looks reasonably likely that Warren Buffett is behind this, rather than the two investment managers working for him, Todd Combs and Ted Weschler. Okay, so what does TSMC do? Well, TSMC is one of the biggest and most important companies in the semiconductor industry. TSMC is a dedicated foundry. So the semiconductor manufacturing process starts with thin silicon wafer. On this wafer, semiconductor devices are fabricated, that is, made. It's this wafer fabrication that TSMC focuses on. That activity makes up about 90% of its revenue. TSMC's customers are many of the world's leading semiconductor companies like AMD, Broadcom, Intel, and Nvidia. The company's revenue base has always been very concentrated in a few companies, but it's become even more so recently. In the mid-2000s, its top 10 customers contributed half of its revenues. Today, TSMC's top 10 customers contribute nearly 75% of its sales. Part of this is because the foundry services that TSMC offers involve a lot of frequent and deep interaction with customers. These are very close customer relationships. Let's take a step back and see if this fits the typical mold of a Warren Buffett investment. In his letters to investors, he often talks about his desire for businesses with a high return on capital, a moat, good management, and a margin of safety. Let's start with return on capital. TSMC definitely ticks this box. Return on equity over the last decade has averaged 26%, and it's never been below 20%. TSMC's been able to do this because it's a very high margin business. Check out its operating margins. They've been between 30 and 40% and recently gotten into the low 40s. Those high operating margins can be achieved because of TSMC's moat. Its competitive advantage is scale. TSMC is the biggest dedicated foundry in the world. Last year, it had capacity to make 14 million 12-inch equivalent wafers. Semiconductor manufacturing facilities need a huge investment to be built, but once built, your costs are mostly fixed. TSMC owns most of its manufacturing facilities, so its cost base is mostly fixed. As production volumes of wafers increase, TSMC can spread those fixed costs over a bigger and bigger volume base, so the unit cost of each wafer effectively goes down. Another competitive advantage is just its technological know-how, given how fast this industry moves. Let's have a look at the valuation. I think this is probably the part that is hardest to understand how Warren Buffett does things because there's no set formula, but let's take a stab at it. So Berkshire's average reported price for TSMC is $69. That values the whole company at $358 billion. If we use 2021's earnings of $21 billion, that's an earnings yield of 6%. Over the September 2022 quarter that Berkshire bought this new position, the US 10-year bond yield has been around 3%. So the investment beats US bonds at this valuation. If there's no change in the PE ratio going forward, the share will move in line with earnings growth. Over the last 5 to 10 years, TSMC has compounded earnings at a mid-teens rate, around 15 to 17% a year. If it can continue to do so going forward, the share is likely to outperform the market given that the market's unlikely to grow at a mid to high teens rate. Now, the semiconductor industry is cyclical. We've seen from recent results of AMD and Nvidia that there is excess inventories at the moment, so it's not at all straightforward. Another reason why the share may look cheap is because of geopolitical risk. TSMC is a Taiwanese company. Importantly, most of its manufacturing facilities are in Taiwan and Japan. There's a lot of speculation that China will use military force in the relatively near future to cement its claim over Taiwan. That risk hangs over TSMC stock like a cloud. Hypothetically, Investors could wake up one day to that news, and the outlook for the business could change dramatically in an instant. TSMC is a fascinating company. It's the biggest company in the MSCI Emerging Markets Index by some distance. The whole world is very dependent on its products, and it now has the world's most famous investor as one of its owners.